The venture capital industry has been going through some turbulence as senior partners leave legacy VC firms in droves, it looks like. And this comes with the backdrop of an industry that's been under pressure in recent years, and that's probably an understatement. CNBC's digital reporter Ernestine Sue is here to tell us more. And Ernie, why is this happening in the first place? Why are there so many people leaving?
Yeah, good morning, Martin. So that's exactly right. A lot of senior partners have been leaving their legacy VC firms. This is happening both in Silicon Valley and in Asia. And some high-profile departures recently include the likes of Matt Miller from Sequoia, Bilal Zuberi from Lux Capital, and also a couple of names from this region of the world. Okay. And it's important to note that a lot of these senior partners have spent over a decade working at their respective firms. And while turnover is common among juniors in the industry, historically it's been more rare to see among senior partners because these roles tend to be more coveted, they're typically more lucrative, and all in all just difficult to come by.
Are they leaving to start out their own funds? Or
yeah, that's a great question. Yeah. Definitely. So I have seen this happen as well. Some of the major reasons, from investors I've spoken to who've left their funds, they say that they've left because they feel like some of these big funds have gotten too big, and which is interesting, right? So one investor I spoke with, Rick Zula of Equal Ventures, he put it perfectly. He said, I think we've seen a big sea change over the course of the last decade that's led to the venture capital industry turning into asset management more broadly. And I think this is actually the crux of the issue. So, some of these senior partners are saying, hey, look, I don't want to be an asset manager. I want to be a venture capitalist.
This is not what I signed up for, in other words,
exactly,
right?
Exactly.
Okay.
So a lot of them have gone off and gone solo. They're starting their own early stage funds. And of course, the idea behind this is, look, they want to work closer with founders, which is maybe what they were originally passionate about. And also, of course, if you're investing earlier stage, there's also potential for more financial upside.
Okay. So listen, you've been following what's been going on with tariffs along with everybody else, obviously, right? Before all this erupted, and actually before Trump was reelected, right, there was a hope that, look, rates are coming down. It's going to be good times again, potentially for VC after some probably the last 2, 3, 4 pretty awful years, right, for anybody that's been in VC or even PE for that matter, right? Then Trump gets reelected. Then we have the tariff war erupting, etc. We've got the threat of higher inflation and higher rates before maybe we dip into a recession. So these VC guys, how are they feeling right now?
Yeah, so based on my conversations, I think they're very much in a wait-and-see mode. Yeah. The sentiment does not seem good from conversations I've had in this region. But again, it's just, I think everyone's just looking out to see what's going to happen. And the impact, I don't think, has really been felt just yet.
Are they finding it harder to raise money in this kind of environment, though?
I think so, definitely. Yeah. It's more bad news, right? Yeah. So I think that definitely is the case.